Welcome, everyone. Thank you so much for joining us for today's Appraisal Buzzcast. I'm Jim Morrison, and with us today we have Joan Trice, founder and CEO of Allterra Group, Dave Stevens, CEO of Mountain Lake Consulting, and Luke Tomaszewski, CEO of Proxy Pics. We'll be taking a broader look at the 3,000-foot view about what's going on in housing finance, talk about what's next for the real estate appraisal industry, and what appraisers can expect from appraisal technology in the future. Joan, I'll hand it over to you.
Thank you. And Dave, welcome, old friend. I haven't seen you in a long time.
Great to see you, Joan.
So Dave, you've got an incredibly diverse background in and around housing finance. So why don't you share with our audience today, which is comprised of mostly appraisers, but I know many of them are familiar with you, but give everybody an update.
Well, thanks, Joan. Yeah, so I've got about 4 decades in the business. Started with World Savings Bank back in the early 1980s. Got recruited to Freddie Mac from there and ended up as senior vice president, head of the single family business at Freddie. Did a period of time at Wells Fargo as executive vice president running wholesale. Was recruited to Long & Foster, a big real estate firm on the East Coast. Actually, it was the largest privately held real estate company in the nation at the time, and came in to run their mortgage businesses and title businesses, et cetera, but ultimately became president and chief operating officer of the whole company, including the real estate group. And then when President Obama got elected, I got recruited to come into the administration. As you all remember, that was the housing crisis. And I became the federal housing commissioner after being confirmed by the Senate. And then when I left the administration, I got offered a position at the Mortgage Bankers Association in Washington as their CEO and president. I ran that for a little over 7 years and then made the decision to try to head into retirement, which I have failed miserably at. And I am now CEO of Mountain Lake Consulting. I have a variety of clients across the country in the mortgage space.
Excellent. In fact, there's a few things along the way that I didn't even know about, like the Freddie Mac. So I think I had the rest of your resume down. So wow, I just came from DC, by the way. I was just there last week, and I will say this, it was a lot more vibrant in terms of activity than my prior trip last summer. So it's good to see human beings back in our nation's capital and a lot more livelier. But we've got a lot going on. We have an interesting market dynamic going on. Give us, as Jim said, kind of the 30,000-foot view as you see it.
We have an interesting industry in that we actually, the mortgage industry in total and all its support services, actually do better in recessionary times when the Federal Reserve is intervening to try to help the economy stay afloat. So during the Great Recession, beginning in 2008, the Fed came in with 3 rounds of quantitative easing, driving interest rates down. And then the HARP program, which was supported by the administration at the time, the Obama administration, allowed folks to refinance underwater mortgages, negative equity mortgages. And then we actually saw rates beginning to rise in 2018 and early 2019. Towards the end of that year, we rolled into the pandemic recession, in which case Chairman Powell came in and the Fed did the largest round of quantitative easing ever in history, driving interest rates down to the low 2% range. So when the rest of the economy is feeling ill and the Fed does what it can to drive rates lower to keep the money supply strong and borrowing availability high, that's when everybody wants to refinance. And so during that period of time, the US mortgage market had 2 record years in its history. 2020 and 2021 were $4 trillion mortgage years, biggest ever. And that's great. And everybody was very successful. Appraisers were backlogged. Appraisers were swamped, in some cases accused of all sorts of things like turning away orders and things of that sort because of drive time or whatever it may have been. But here we are. We're in 2022. The Fed is backing away. It's made notice publicly that it tends to ease its holdings. So that could mean it may redistribute some of the mortgage-backed securities it owns now and has purchased back into the market. And on top of it, it's been raising rates, right? And we expect another likely 50 basis point rate increase very shortly. So all of this to say that pain of rising rates is being felt everywhere, right? We now have 30-year fixed rate loans near 5%, at least in the high fours. And
I know, but wait.
yeah,
I have a hard time, like you
Yeah.
and I mean, I got some gray hair underneath Lady Clairol here. So, I remember 18% interest rates.
Sure.
5% certainly doesn't sound like the end of the world to me or probably you, but I guess if you're a millennial, it sounds frightening, right?
I think it's all relative, Joan. I mean, I started when I first started as a loan officer, my fixed rate was 16%. I think we charged 1.5 points on it. So, and we were selling ARMs because ARMs was the only offer. And I think the teaser rate on my ARM was 12.5 or something.
Right.
It is an entirely different scenario. But the problem is it all depends. What's affecting the marketplace is we've just come out of 2.5 or 2.25 at its low, and there's nothing left to refinance. So this has nothing to do with the reality that 5% is still a really good rate and it's near historic lows. But the reality is that it still means the market's going to contract. There's nothing left to refi. We refinance the world at 2.25, and except for cash out refinances and borrowing us going into recession and the Fed again reversing course on rates, this market's going to be very different. In fact, the MBA forecasts that this year is going to be somewhere around $1.6 to $1.7 trillion. I mean, less than it was last year and the year before. I mean, that's a massive reduction. And the amount of reduction alone year over year in market size is about what a normal market produces on an annual basis altogether. So that's why you're seeing a lot of change going on with lending institutions. You're seeing margins compress, companies doing layoffs, public companies having to do, really crazy statements and things of that sort as they go through this process, announcing changes in leadership and potential merger and ridiculous hiring bonuses to bring loan officers on. So a really tumultuous time, in my view. I actually view this market we're in and what's ahead of us as what will likely be the biggest paradigm shift that I've ever seen in my 40 years in the business. We've had a lot of change. But since I started in 1983 in the business, rates have progressively essentially gone down, right? From 16, with some bumps along the way, but ultimately ending up at 2.25. We haven't seen a substantial and sustained rise in rates yet. And, the rise since January of 2020 is over 200 basis points so far. So you're right, 5's a great rate. If people could just, think about what's relevant in terms of affordability, they wouldn't worry so much. But what loan officers are having problems with is just the fact that there isn't enough inventory for purchase transactions, even though the demand is high. And there's certainly been a massive contraction in refinancing. So that just means revenue coming in to mortgage companies. And frankly, all the support services involved is going to be lower unless there's some, significant market shift going back the other way that culminates with the Fed reversing course and rates going back down again. And that's, yet to be seen.
Yeah, no, I understand. So let's do this, Dave. Let's take a break for a quick commercial message, and then we'll be right back.
Appraisers, what if you could inspect, photograph, and measure a home without leaving yours? With Remote Val, you get to harness the power of new technology without giving up your process or compromising on quality. With our easy-to-use software, you connect to the homeowner's phone and complete your inspection as you normally would. Remote Val lets you capture high-quality, meta-tagged photos and take accurate measurements and communicate directly with the homeowner to get the information you need. Remote Val is fast, easy to use, and completely free for appraisers. To see a demo of Remote Val in action, visit incenteram.com.
All right, thank you, Jim, and welcome back, Dave. So you kind of laid the groundwork for what's going on. How is all of that going to impact the boots on the ground appraiser?
The purchase market, at least at this point in time, remains still extremely strong. We're seeing very large purchase years. And in fact, most forecasts show that this year is going to be one of the strongest purchase years in American history. So demographics are such that millennials are entering their peak buying years. And yes, while we have inventory shortages, that's a problem. There's still a lot of homes being sold. We are oversupplied with loan officers, lenders, across all the systems that support the economy. And then on top of it, we have a very active policy arena inside the Beltway that's really focused in your world, Joan. Appraisals are now under scrutiny because of complaints around discrimination. We have new terms like whitewashing homes. Chairman Waters, the House Financial Services Committee last week held a hearing on the subject. Secretary Fudge has put in public notice, along with the rest of the administration, that they want to focus on discrimination or potential discrimination in appraisals. And so, there's going to be a lot of pressure, I think, on the policy front, scrutinizing the appraisal industry. And I think a lot of it is going to look at both punitive measures that could be taken if discrimination is found, and ways to report suspected abuse in that area, which, right today, I don't think there's really a hotline at the CFPB or at HUD, those kinds of things. And I also think there's going to be efforts to try to automate where possible, because automation is essentially colorblind. Whether discrimination exists or not, you can have your own opinion of that. I will just say it doesn't matter. The policy world that makes and regulates rules believes that discrimination exists, and they believe they have enough evidence to support that. And all it takes is a bad apple to spoil a bunch. And in this case, I think there probably have been some bad apples, enough so that it's going to put the whole industry to test. And that's where I think some focus on ways to take out activities, judgment, prejudice that could occur, so that we don't have to hear these stories about African-American families who get one value, then they convince the lender to do a second appraiser. They ask their neighbors to come in who are white, take down all the pictures, put up, white family pictures and more. And those stories, unfortunately, have been in the New York Times, the Chicago Tribune, the LA Times, San Francisco Chronicle, you name it, across the board. They're out there. And so it's hotly in debate, and it's very real right now.
So let me ask you a question along that line, because I'm hearing different things from different stakeholders. There are some suggesting that an AVM is colorblind, and then the naysayers say just the opposite, that human beings write the algorithms, and that the process of selecting comparables by a machine is the exact same process, that it emulates the process that a human does. So because it's still a sales comparison approach, how would that solve a problem?
I think the argument, the answer to that from the policy makers on that topic would be the following. The reality is, you're not going to solve suddenly by technology, AVM models, all the need to support all appraisers, all appraisals. So for example, you come from the DC, Maryland, Virginia area. Prince George's County homes sell for less generally on an average sales price level than Montgomery County, Maryland. They border each other, but the homes have a generally a lower average sales price and a higher average population mix of African Americans and minorities. And you're not going to suddenly take homes in Prince George's County and bring in Montgomery County comps, because they're not close and they're not comparable from that standpoint. And that's going to be an inhibitor. An AVM is not going to solve that problem, right? Their algorithm is going to say the same thing. And I think any good appraiser, you particularly and others, would argue you shouldn't do that. You don't want to artificially start boosting prices above what their real value is in the area where the home exists. And we all know that AVMs have really challenging times dealing with rural areas and those kinds of things. So they need a lot of comps that have recent data, that are close by. And so they tend to do better in around urban markets, suburban markets around urban areas that can provide enough data to be able to give you a pretty good match on an AVM standpoint. But I think what they do believe is that there are some appraisers, and I hate to tell you, Joan, I have a friend who went through this himself with his wife in a really great neighborhood, and went through the double appraisal and whitewashed the home, and I saw it close up. And is there prejudice to someone walk in a home? Is it possible in some areas of the country that someone walks in with a preconceived notion after they see the homeowners. And I think it's totally the exception to the rule. But as I said, you don't need many cases, right? There aren't that many cases that are even shown in these articles. In many cases, I've seen multiple articles, and the same family has been in several of the same articles. But if it exists, it just exacerbates the view in the policy world that there is discrimination. And so is it an AVM itself? Is it separating the individual that does the actual home inspection, which is photographs and measurements, versus as someone who actually does the write-up and determines value? That discussion is currently in place. Is there a combination of technology and separation of decision-making that could allow the person who actually determines the value to not have any understanding of who the current owners are personally, because you don't take pictures of the family when you do the appraiser. The only way that you meet that family is when the appraiser greets them at their house to do the appraisal. And it's probably more impactful on a refi than a purchase, as you know, this discrimination concern, because on a purchase, whoever the seller is moving out. Oftentimes it's a real estate agent who meets the appraiser, well, sometimes to let them in, but or they just get into a lockbox. But the reality is, I think there's a variety of solutions that are being discussed. And Joan, I think the experience that lenders have, some of them, over the last couple of years with so much volume and service standards being difficult to meet, are open-minded to new ways to do appraisal as well. And so, we all know that we really do have a shortage of appraisers. Appraisers are aging, and that the time and effort it takes to become a licensed appraiser is about the same time it takes to become a doctor, it seems to me. So, your industry is highly skilled, highly trained, but the barrier to entry to come in to earn a few $100 for every appraisal is a lot of testing and work that has to be done. And we haven't seen the influx of new appraisers coming into the marketplace. So that, in addition to the discrimination concerns, I think is opening up an umbrella of opportunity for technology providers to work with appraisers and the appraisal industry to come up with kind of a hybrid or modified solution in some cases, because we all know there's no technology, I don't believe, that exists today that can automate every appraisal in the country. It requires, the right set of data being available in order for an AVM to get a hit with confidence. And even in those cases, you're going to have some errors. But to weed out personal prejudice, I don't think there's an algorithm written by any tech person that builds in a prejudice factor. What color is the home?
Yeah, I don't think there's a bias detector yet.
That's correct. Yes.
Yeah,
right.
I have my own personal BS detector, but I haven't patented it yet. So
did I tell you what my home's worth, by the way?
Just look it up online. Let's do this. Let's take another break, and when we come right back, I'm going to challenge you with a regulatory question.
Okay. The Dictionary of Real Estate Appraisal, 7th edition, is a landmark text that reflects the depth and breadth of appraisal knowledge. Each entry, definition, and reference has been painstakingly researched and designed to reflect an expert understanding of issues that currently impact the profession. The new dictionary is an essential authoritative resource for all appraisers. To purchase, visit appraisalinstitute.org/dictionary7.
So let's bring Luke into the conversation here and talk about the technology and what's going on in the appraisal space, because Luke, you're both an appraiser and you own this company, Proxy Pics. So you're very involved on the technology side. So what do you see going on?
So definitely lots of, changes like Dave mentioned earlier, where, we do see policy changing, like Dave mentioned with, the bias. I definitely agree. It's, a few bad apples that may, cause issues. I don't think most appraisers, do have that racist mentality in any way. When we see appraisals, we do realize that there's a range of value always. So one appraiser could come in at that lower end of the range, and some might come in, at that higher end of the range. So again, we really don't know where that, topic hits home, if it's a racist appraiser or not, but we do see, technology is, solving for some of these potential issues. Dave mentioned the, bifurcation of the process. That's been a topic for a long time. If we separate the inspection from the actual valuation. So that may be for one solve. We've seen technologies where they blur out family photos during the inspection. If a person's present, it blurs that out. So that might be where, things are headed. And, with the decrease in the number of appraisers in the aging population, it may even, help and solve, where, appraisers go with, extended turn times in some markets if we have the ability for a third-party inspection. As an appraiser, it tears me at both sides where I still enjoy, doing the inspection. It's a nice separation of office and field work, but at some point, this, it may be a great option in specific markets, I think.
Excellent. No, in fact, as we've been talking about the aging of our profession or the graying of the appraisal population, there's probably an awful lot of appraisers who would be more than willing to do nothing but sit behind a desk rather than do the field work. I'm with you. I love the field work and I like the balance of the two. Because I don't like to sit behind a desk all day, but I also appreciate the achy joints and not wanting to get on a ladder or stick your head in a crawl space and do some of the more physical aspects of that. So I'm seeing with the introduction now from Fannie Mae of ANSI standards, aren't we seeing an awful lot of technical solutions coming forth on that process as well?
Yeah, we definitely are. So we're seeing a lot of, interest from, investors from outside the real estate industry really hopping into appraisal world today. I think we're seeing more and more acquisitions of AMCs getting purchased, more technology providers jumping into this space. So I think, it's really good timing. I think it should have happened a long time ago, but again, we're not going to see the need for change until there's issues, things hit the fan, and that's what we've had over the last 2 years with, I remember 2016, we had a crazy amount of volume. And when Dave shared, some MBA numbers with me, we doubled the volume in 2020 and 2021 from the 2016 days. And I remember being busy back then. So it really, opened up, some areas of concern where, we've heard the horror stories of somebody wants to buy their dream house and the only reason they didn't is because the appraisal either never came in, they couldn't find an appraiser. And it's horrible to hear, being an appraiser myself, where, that's, the one reason that, that didn't happen. So I think it's a perfect opportunity where we've seen some pain points and, what we as appraisers can do to, help solve those for the future.
Yeah, and for those in the audience, which is most everybody who have a little age on them, so Dave will appreciate this. So Dave, I started my appraisal company, my independent appraisal company in 1986. And it was at the beginning of a major refi wave. In fact, refis really hadn't even been a thing, I don't think, prior to that era.
That's
and
right.
This is how, and Luke, this will make you laugh because I'm not going to ask you how old you were in 1986, but
Luke, we were even born in 1986.
Yeah, let's not even go there, Dave.
I was 2.
You were 2. Okay. So the reason my company experienced explosive growth was I had a staff operation. And when I entered the Eastern Shore of Maryland market, my competitors' turn times were 30 to 45 days. There was no technology. There were no computers. Luke, there was
no fax machines,
no
no
internet,
cell phones,
no mobile phones. So Dave and I can, talk about the Wayback Machine, and I had a bag phone that was the size of a car battery, and it was 35 cents a minute to talk.
Joan, I knew my appraiser's favorite beverage, and I would buy him a bottle to do a quick one for me. And I think the home valuation code of conduct might have changed out of it, but that just tells you.
Yeah, because of that. Darn it. Yeah, that's what we all said when that happened. So incrementally, technology has made giant leaps, but it seems to be at certain inflection points. And certainly in the mid 80s, it was one because we automated, we used computers, and then fax machines came, boy, and that was like, ooh, love that sound of that 2400 baud modem screaming, because I knew that was money coming in over the fax machine. So you guys don't even, you youngsters don't know what that's all about.
But one interesting point, and this brings in how kind of solutions like Proxy Pics is so unique. So Fannie Mae, Freddie Mac, as you know, have been allowing property inspection waivers on purchase transactions. I just recently bought a condo in the DC area less than a year ago, and I got a PIW. I never had to pay for an appraisal actually, which was great for me. But they're concerned now about overinflation in property values, and as a result, they're now pulling back on PIWs. And so that means more appraisals have to be done. If you can get a solution that brings, a technology solution combined with some human intervention, perhaps, to go in and make sure someone's getting pictures and measurements and it's the right property and those kinds of things, and it's effective and it's viewed as accurate and quality controlled and all of these things that lenders and investors care about, especially the GSEs, you can deal with the volatility of policy changes that may occur out of the GSEs, like pulling PIWs. Or if we move into recession, which, suddenly the front page news today, and we move into recession in 6, 8, 12 months for a variety of reasons as the Fed tries to control inflation, that means rates will probably go back down, refis will kick back up, we'll have more demand. And again, we'll be back with service and delivery concerns. The one thing that I find remarkable is that the appraisal industry is one that really hasn't been Ubered or Amazon like every other industry. In fact, you could say that almost across the board for mortgages. And so we have a lot of new, rocket mortgages of the world, which are trying to do a pure technology delivery on the loan decision. But we still have an appraisal industry, which for the most part relies on individual human trained appraisers to go out and inspect a home. And, Luke's an interesting person because and there are many others, I'm sure, that do this. I've just gotten to know Luke over the years. He's an experienced appraiser, has an AMC, and developed another solution which can, in partnership with appraisers, fill a massive void. And in fact, that may be directionally where the rest of the industry ultimately will have to go as appraisers age out and we worry about bias and being able to handle capacity changes and policy changes without being like suddenly have the industry sit on its butt because we don't have enough people to go do a certain specific job. And so it is an interesting time, right? I mean, we really haven't had any massive change. And I'll just tell you, I remember when HVCC passed, and I've, as you know, ever since I've been back since, I'm not going to go back in time, but since I was head of single family business at Freddie Mac, I've sort of been in housing policy, which led me into the Obama administration and then the MBA. People would call me and yell at me about HVCC. I mean, you remember, Joan, all the angst over this policy, but I think its intent was right, honestly. I think the intent was don't try to influence, and you cannot influence the appraiser. It's illegal, and unnecessary pressure, any pressure actually, is outlawed. Did it help ultimately? I don't know. It created this whole thing called an AMC or panels or whatever people have done to show that they're not picking their best favorite appraiser every time. And yeah, it's not perfect, but we're now on this next phase. We're on this phase where the mortgage industry across all segments, from e-signing through the process of loan origination, through the process of appraisal, and more, there are extraordinary efforts to become more automated. And so for people to think, oh, they'll never replace me, and I have loan officers tell me all this all the time, they'll never replace the loan officer. We'll see, we'll just see how that goes. If it becomes such a commodity that, and younger generations are so technology comfortable that they really don't need a person involved, just give me the rate and tell me what to do, I think the industry will evolve. And I think what Proxy Pics is doing, and I've talked to a couple other companies doing similar but different things, you can't turn a blind eye to this. This is probably where the future of appraisal is headed. And I think if I read the policy from, was it Freddie, Luke, or Fannie, that just approved you as one of the desk review companies or something like that. It was in something that came out of one of the GSEs. So they're moving in that direction too. And if they can get confidence over third-party technology providers and confident in all of their quality control and the risk components, making sure that it's accurate, geocoding and all this stuff that I know nothing about, and Luke could probably talk for hours about, that I think that's something that probably tells us where the industry is going to be headed. Now, will that be a solution for rural properties, acreage challenges, brand new construction developments where you don't have any resales in it? You have to figure out what the value is. Really slow markets or markets that are heading south will be able to pick the right comps to be able to accurately, nail the value that tells you this market's declining, this market's increasing with all those adjustments in place. Is technology there today? Well, Luke could tell you if his is, but that's where human appraisers, as of most recently, have been really valuable. And so these are the things that are coming in play. But machine learning and the quality of technology, I mean, we're seeing robots right now on social media that are talking to people. I think we just ought to have a reality check that, our industry has not been Ubered, has not been Amazoned. We haven't brought real efficiencies in a macro way. And I see no reason why the appraisal industry would be excluded from that as we go forward.
I think that's a perfect summary, Dave, is that we are absolutely at an inflection point like we were in '86, where we're about to take a giant leap. I do believe, because we have to. It's just time. As you said, we've been left out, we left behind, and there's a whole lot of change coming our way. So, well, thank you both for joining us today, and hope to see you both soon.
Perfect. Thanks, Joan. Thanks, Dave.
Well, thank you, Joan, Dave, and Luke for joining us. That was very enlightening, and it will be interesting to see if we're on a precipice of something new for appraisers. So we really appreciate your feedback. Appraisers and listeners, please keep that feedback coming towards us at comments@appraisalbuzz.com. Thanks and have a great day.